Have you ever wondered why some traders consistently make millions while others blow their accounts in weeks? What if I told you the difference isn't intelligence, fancy algorithms, or secret insider information? What if the real edge in trading has been hiding in plain sight all along? My friends, the market reveals its secrets to those patient enough to listen. Jesse Livermore, perhaps the greatest speculator who ever lived, understood a fundamental truth that most traders never grasp. Speculation is the most profitable business in the world, provided you know what you're doing, and the most ruinous pursuit, provided you don't. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? You enter a trade with conviction, only to panic and exit at the first sign of trouble. Then watch in agony as the market reverses and runs precisely in your original direction. Or perhaps you've experienced the opposite, taking quick profits on winners, only to see them continue climbing for days or weeks afterward. The market is a brutal teacher, isn't it? It punishes impatience and rewards those who can wait. But here's what's fascinating. Most traders are looking in entirely the wrong place for their edge. They obsess over entry signals, complex indicators, and the latest trading systems, when the real fortune lies in identifying the big moves before they become obvious to everyone else. Stay with me until the end, because what you're about to discover might completely transform how you approach the markets. The patient hunter who stalks the market carefully, who can distinguish between meaningless noise and the subtle signals of a genuine opportunity forming. That's the trader who consistently profits year after year. Think about it. The crowd is always chasing what's already happened. They pile into trades when the headlines are screaming, when the move is already half over. By then, the professionals who recognize the early signals are already taking profits, selling to the latecomers who will soon be underwater. This principle applies whether you're day trading crypto, swing trading stocks, or investing in real estate. The disciplined speculator doesn't chase excitement or quick riches. They develop the rare ability to wait, sometimes for weeks or months, until the perfect setup appears. What you're about to learn in this video isn't just another trading strategy. It's a complete shift in perspective that few ever master. We'll explore how to spot those early signals that precede massive market moves, how to develop the discipline to act only when the odds are heavily in your favor, and perhaps most importantly, how to cultivate the patience that eludes most traders. Now, imagine having the confidence to sit completely still while others around you are frantically trading, knowing that you're conserving your capital and mental energy for the opportunities that actually matter. Imagine recognizing the subtle clues in price action that signal a major move is brewing long before it appears on anyone else's radar. If you're serious about mastering the markets and developing the patience and courage we've discussed today, hit that subscribe button right now. Join our community of traders committed to catching those big moves before the crowd even notices them. Imagine the transformation that happens when a trader finally understands this critical truth. It's not about collecting small profits day after day. That's what the masses do, and the market rarely rewards what the masses do. The real wealth creation, the kind that builds generational fortunes, comes from catching those big, substantial moves that happen perhaps a handful of times each year. This revelation changed everything for Livermore, though he learned it through painful experience. He would often take a quick profit, feeling satisfied with his small win, only to watch in agony as the stock continued marching upward without him for weeks, sometimes months. The psychological impact of being right about the direction but wrong about the magnitude haunted him throughout his early career. Think about your own trading journey. How many times have you Closed a position for a modest gain, only to see it continue in your direction, leaving potential profits that dwarfed what you actually captured. This isn't just a tactical error. It's a fundamental mindset problem that prevents most traders from ever achieving significant success. Here's the hidden truth that few understand. The market doesn't reward hyperactivity. It rewards patience and conviction. The difference between the amateur and the professional isn't intelligence. It's the ability to sit tight when you've found something worth holding. Now, I want to go even deeper into this topic by exploring how these significant market moves actually begin. This might be the most valuable insight of all. Major market movements don't announce themselves with trumpets and fanfare. There's rarely a headline that says, "Attention traders, a massive opportunity is forming right now." Instead, these big moves start quietly, almost imperceptibly. The market tips its hand in subtle ways that only the most attentive observers notice. Perhaps a stock becomes unusually resilient during market weakness. Maybe it starts holding its ground on bad news instead of selling off. Or volume patterns shift in ways that suggest accumulation is happening beneath the surface. By the time CNBC is discussing the move, by the time your neighbor is asking about the stock at a barbecue, the professional traders who recognize those early signals are already sitting on substantial profits. The noise comes after the real opportunity has already been seized. This requires a complete shift in how you approach your decision-making process. Most traders are reactive, responding to obvious developments that everyone can see. The skilled speculator is proactive, identifying the subtle shifts in market behavior that precede the obvious moves. This capability isn't mystical or based on some rare talent. It's a skill that can be developed through deliberate practice, through studying price action with the same intensity a doctor studies anatomy or an attorney studies law. It's about training your eye to recognize patterns that most miss because they're too busy following the crowd. What patterns have you noticed in your own trading that might be signaling these quiet beginnings of bigger moves? Drop a comment below with the phrase, "I see the signals," if you've experienced that moment of clarity when you spotted something in the market before everyone else. Let me share a perspective that completely revolutionized my own trading journey. In a world drowning in financial news, expert opinions, and endless market commentary, there exists one pure, undistorted truth: price action. Everything else is just noise. This revelation may seem simple, even obvious, but its implications are profound and far-reaching. Think about it. How many times have you heard a compelling story about why a stock should rise, only to watch it relentlessly fall, or read a bearish analysis that made perfect, logical sense while the security in question continued climbing higher? The disconnect between narrative and reality is the graveyard where trading accounts go to die. Livermore understood this at a fundamental level. The market doesn't care about what should happen or what makes sense. The price is the only reality, the only truth that matters. It contains within its movements all the information you actually need. The collective wisdom and actions of every market participant distilled into a single, pure signal. This mindset shift represents a form of liberation. When you truly internalize that price action is sovereign, you free yourself from the endless quest for that perfect piece of information, that expert opinion that will somehow give you an edge. You stop fighting against what the market is clearly telling you and instead learn to align yourself with its message. But here's where the journey becomes even more fascinating. Even if you master reading price action correctly, human psychology presents another formidable barrier to success. Our natural instincts are perfectly designed to fail in markets. When we're profitable, anxiety creeps in. What if I lose these gains? We become increasingly nervous as profits grow, often selling far too early. Conversely, when positions move against us, Hope springs eternal. It will come back, we tell ourselves, allowing small, manageable losses to grow into account-destroying disasters. The successful speculator must undergo a profound personal transformation. You must learn to do what feels unnatural, ruthlessly cutting losses short while having the courage and conviction to let your winners run their full course. This simple principle, asymmetric risk management, is perhaps the most powerful concept in all of speculation, yet it requires battling against deeply ingrained human impulses. Ready to transform your trading with these timeless principles? Subscribe now to continue this journey with us as we explore the psychological dimensions of market mastery that few traders ever discover. I've witnessed countless traders who can analyze markets brilliantly but still fail because they cannot master this psychological dimension. The technical skills are trainable, but the emotional discipline, the ability to act contrary to your instincts, that's where the real battlefield lies. What's particularly fascinating is how these two principles intertwine. When you truly believe that price is never wrong, it becomes easier to cut losses quickly. After all, the market is telling you something important about your position. And when you're committed to letting winners run, you naturally become more attentive to what price action is revealing about the strength and durability of a trend. This isn't just about trading techniques, it's about a fundamental realignment in how you perceive markets and your relationship to them. If you've experienced that moment when you finally stopped fighting the tape and surrendered to what the market was actually showing you, type price truth in the comments below. The journey toward trading mastery takes an unexpected turn when you discover the power of strategic inaction. Most people enter the markets with a bias toward constant activity. They feel they must always be doing something to succeed. But the professional trader understands that genuine clarity in markets is rare and precious. When signals are mixed or unclear, the disciplined speculator does something that seems counterintuitive to the beginner. Nothing. This waiting game, this deliberate restraint, represents perhaps the highest form of trading discipline. Imagine the resolve required to watch the market day after day, studying price action, observing volume patterns, noting support and resistance levels, all while resisting the powerful urge to act before the picture becomes unmistakable. Sometimes this clarity arrives quickly. Often, it takes days or even weeks of patient observation. The psychological dimension of this waiting period is fascinating. Your mind plays tricks on you, creating phantom patterns where none exist, manufacturing urgency where patience is required. The amateur sees random noise and interprets it as meaningful signal. The professional knows the difference and waits for genuine clarity to emerge from the chaos. This is why trading is ultimately a journey of self-mastery. The market is merely the arena in which you confront your own impulses, biases, and emotional reactions. Those who develop the inner strength to wait, to resist the siren call of action for its own sake, position themselves to capitalize when truly compelling opportunities finally present themselves. But here's where the path becomes even more challenging. Let's say you've done everything right. You've waited patiently, identified a high probability setup, and entered a position that begins moving in your favor. Now begins the second test, often more difficult than the first. Holding your position through inevitable fluctuations. The market has an almost supernatural ability to test your conviction. Once you've established a profitable position, the market seems to know exactly how to shake your confidence. It retraces just enough to make you question your analysis. It moves sideways long enough to breed boredom and doubt. It creates frightening, sharp pullbacks that trigger your instinct to protect profits. These moments reveal the true character of a trader. Anyone can enter a position. Relatively few can hold through the psychological warfare the market wages against them. The ones who surrender to fear or impatience watch in dismay as the market resumes its trend immediately after they've exited, capturing only a fraction of the move they correctly identified. This is why Livermore emphasized that his sitting tight, not his thinking, made him the most money. The capacity to maintain conviction through market fluctuations isn't merely a trading skill, it's a profound test of character. It requires emotional resilience, clear thinking under pressure, and an almost philosophical acceptance that markets never move in straight lines. If you've ever experienced that moment of perfect clarity, when you knew exactly what the market was telling you, type "clarity moment" in the comments below. Or if you felt the unique pain of exiting a position prematurely, only to watch it continue in your favor, share that experience too. Let's explore one of Livermore's most profound insights, a truth so counterintuitive it challenges everything most traders believe about success in the markets. He stated with remarkable clarity, "It never was my thinking that made big money for me. It was my sitting." This revelation shatters the common belief that analytical brilliance is the primary determinant of trading success. Most people entering the financial markets come from backgrounds where intellectual horsepower is highly rewarded. They believe their superior analysis, their clever strategy, their unique insights will give them the edge. But Livermore understood the uncomfortable truth. The hardest part isn't figuring out what to buy or sell. It's having the emotional fortitude to remain positioned long enough for meaningful profits to materialize. This realization represents a genuine paradigm shift. The greatest obstacle to trading success isn't external, it's internal. It's not market complexity, but human psychology that creates the real challenge. The ability to sit tight, to resist the constant internal pressure to act, to endure the emotional discomfort of uncertainty while profits grow. This is the rare skill that separates the consistently successful from the perpetually struggling. Consider the profound impact this mindset would have on your trading journey. How many times have you identified the right opportunity, entered at a reasonable price, only to exit far too early because the emotional pressure became unbearable? The market rewards those who can withstand this pressure, who can cultivate the inner stillness necessary to let winners fulfill their potential. Now, I want to go even deeper into understanding why so many traders fail to develop this capacity. One of the primary culprits is our natural tendency to seek external validation and guidance. The world of financial markets is flooded with tips, stories, and opinions, all promising to reveal what will happen next. These whispers appeal to our deep desire for certainty in an uncertain environment. But here lies another of Livermore's crucial insights. These tips and stories aren't merely unhelpful, they're active traps that undermine your judgment and independence. A tip is nothing more than another person's opinion, often shared without accountability for the outcome. If opinions alone created wealth, every broker's assistant would be a millionaire. When you trade based on someone else's conviction rather than your own, you surrender the most valuable asset you possess, your independent judgment. You don't know what research led to their conclusion, what biases influenced their thinking, or what time horizon they're considering. You're essentially flying blind, guided by someone who faces none of the consequences if they're wrong. The journey toward trading mastery requires a certain courage, the courage to stand alone with your analysis, to trust what you see rather than what you hear. The market offers only one reliable source of information: price action itself. Everything else, no matter how authoritative it sounds, is secondary at best and dangerously misleading at worst. If you've ever experienced that moment of clarity when you realized a tip or story led you astray, or when you recognized the power of your own judgment over external voices, share your experience in the comments with the phrase "independent thinking" so we can learn from each other's journeys. There's a painful Reality we must confront when examining why most market participants fail to capture significant profits: the follower's disadvantage. In the realm of speculation, timing isn't just important, it's everything. Those who base their decisions on what others are already doing inevitably position themselves at the back of the line, paying premium prices for diminished opportunities. Think about the typical market cycle. By the time an investment idea becomes popular enough to reach mainstream consciousness, the early, substantial profits have already been claimed. The follower always arrives late to the party, buying from those who recognized the opportunity long before it became obvious. This transaction, where the follower buys from the leader who is now exiting, represents the constant transfer of wealth that defines markets. This follower's disadvantage manifests in countless ways. Perhaps you've entered a trade after reading about it in a financial publication, only to find yourself immediately underwater as the smart money exits. Or maybe you've jumped into a stock after seeing it discussed extensively on financial television, not realizing that such coverage often marks the late stages of a move rather than its beginning. The transformation from follower to independent thinker doesn't happen overnight. It requires developing a personal methodology, a way of interpreting market action that doesn't rely on external validation. The consistently profitable speculator builds conviction from their own analysis of price and volume, not from consensus or popular opinion. They understand that by the time something becomes widely accepted as obvious, the real opportunity has likely already passed. This independence of thought connects directly to another critical insight: the relationship between news and price movement. One of the most enlightening revelations in your market journey comes when you realize that significant price moves often begin in the absence of any apparent catalyst. There's no headline, no earnings announcement, no obvious reason, yet the stock begins moving decisively in one direction. Only weeks later, when the move is already half complete, do the news stories appear to explain what's happening. By then, the professionals who recognize the early signals are already taking profits, selling to the public who are just learning about the opportunity through media coverage. This phenomenon reveals a fundamental truth about markets. If price doesn't follow news, news follows price. The smart money acts based on information or insights that aren't yet widely available. Their buying or selling creates the price action that eventually attracts attention and generates headlines. By the time these explanations appear in your newsfeed, the asymmetric opportunity has already diminished substantially. This understanding completely reshapes how you approach the markets. Instead of waiting for confirmatory news before acting, you learn to read the message of the market itself. You recognize that unusual strength or weakness in price action often precedes public information, serving as an early warning system for those attentive enough to notice. If you've ever observed a stock moving significantly before any apparent news catalyst, only to see the reason revealed days later, share your experience in the comments with the phrase "price leads news." These moments of revelation can be powerful turning points in a trader's development. One of the most pervasive illusions in trading is the belief that activity equals progress. Our culture celebrates hustle, constant motion, and visible effort. We're conditioned to believe that success in any field requires perpetual action. But the market operates by entirely different rules. This reality creates a profound disconnect for many traders who equate busyness with productivity. Watch any trading floor or observe any online trading community. You'll see people who wear their hyperactivity as a badge of honor. "I executed 30 trades today," they proudly announce, as if the sheer volume of transactions indicates mastery. But this approach fundamentally misunderstands what the market rewards. The market doesn't pay you for activity, it pays you for being right. And being right is rarely about frequency. It's about quality and timing. This insight represents a complete paradigm shift for most traders. The path to consistent profitability isn't paved with constant transactions, but with selective, high-conviction moves made at precisely the right moments. The revelation that less can be more in trading runs counter to everything we've been taught about achievement in other domains. Think about the psychological challenge this presents. Sitting quietly, observing the market without acting, feels like wasting time to the untrained mind. There's an almost unbearable tension in restraint, a nagging sense that opportunities are slipping away with every moment of inaction. But the disciplined trader understands that this perceived inaction is actually the most productive stance possible. It preserves capital and mental energy for the moments that truly matter, and those moments are far rarer than most realize. Here's another uncomfortable truth about markets. The truly significant, life-changing opportunities appear only a handful of times each year. The vast majority of price movements represent meaningless noise, random fluctuations that seduce the amateur into wasteful activity while offering no genuine edge. The professional trader approaches the market like a skilled hunter, not frantically chasing after every rustle in the undergrowth, but patiently waiting for the perfect shot. They understand that most days require doing nothing, a discipline that feels almost impossible in our action-oriented culture. They preserve their ammunition, their capital, their focus for those rare moments when everything aligns. This realization transforms how you interact with markets on a daily basis. Instead of feeling compelled to trade constantly, you develop the wisdom to recognize that some of your most profitable trades are the ones you don't make. You learn to appreciate that capital preservation between opportunities is just as crucial as capital deployment when they arrive. The market's rhythm isn't designed for daily engagement. It moves in cycles of accumulation and distribution, trends and consolidation that unfold over weeks and months rather than hours. Aligning yourself with this natural cadence means abandoning the illusion that meaningful profits can be extracted from the market every single day. Have you experienced that breakthrough moment when you realized that less trading actually led to better results? If so, type quality over quantity in the comments. It's a turning point that changes everything about how you approach markets. When you've done everything right, waited patiently, studied the price, action, identified the line of least resistance, a moment of truth arrives that separates the consistently profitable from the perpetually struggling. This moment has nothing to do with market analysis and everything to do with personal courage. The ability to act decisively with appropriate size and conviction when genuine opportunity presents itself marks the final hurdle in a trader's evolution. Most people, even those with excellent analytical skills, falter at precisely this critical juncture. They've correctly identified the setup, they understand the potential, they recognize the favorable odds, yet something happens in that moment of execution. A voice of doubt whispers, "What if you're wrong? What if this is the time your analysis fails? What if the market reverses immediately after you enter?" And in response to these fears, they hesitate, they take half positions, they enter tentatively rather than with conviction. This hesitation at the moment of truth represents perhaps the most common failure point in a trader's journey. The market rarely offers perfect certainty. There is always risk, always the possibility of being wrong. The professional understands this reality and acts boldly anyway when the odds are favorable. They size their positions appropriately to the opportunity, not to their fears. Think about your own experience. How many times have you identified the right trade but failed to capitalize fully because you couldn't pull the trigger with appropriate size? The opportunity cost of these moments of hesitation can be enormous over a trading career. The difference between modest success and extraordinary results often comes down to this single factor: the courage to back your judgment decisively when the market confirms your analysis. Now, I want to go even deeper into the ultimate revelation about market success, one that challenges everything most people believe about what it takes to win in speculation. If you were to interview 100 failed traders, most would attribute their lack of success to insufficient knowledge, inadequate tools, or imperfect analysis. But Livermore understood the uncomfortable truth. Speculation is fundamentally about character, not intelligence. This insight explains why so many brilliant people, mathematicians, scientists, analysts with exceptional IQs, fail spectacularly in markets. They approach trading as an intellectual challenge to be solved through superior analysis, when in reality, the primary obstacles are psychological. The market doesn't test your ability to calculate or analyze nearly as much as it tests your capacity to manage your own emotions and behavior. The successful speculator depends primarily on two character traits that have nothing to do with traditional intelligence: the patience to wait for ideal conditions and the courage to act decisively when they appear. These qualities, patience and courage, form the bedrock of trading success. They cannot be downloaded from a website, purchased in a course, or developed through sophisticated technical analysis. They must be cultivated through experience, self-awareness, and often painful losses that serve as tuition. This revelation represents both a challenge and a liberation. A challenge because character development is far more difficult than acquiring knowledge. A liberation because it means trading success doesn't require exceptional intellect or privileged information. It requires psychological qualities that anyone can develop with sufficient commitment and self-reflection. If you've experienced that moment when you realized trading was testing your character far more than your intelligence, share your journey by typing "character over intellect" in the comments below. As we've explored these timeless principles, I hope you've recognized something profound. The market has been testing traders in exactly the same way for over a century. The challenges Livermore faced are the same ones you encounter today: the struggle between patience and action, the battle between emotion and discipline, the constant tension between following the crowd and trusting your own judgment. What makes this journey so fascinating is that it's ultimately not about complicated strategies or sophisticated algorithms. It's about developing the character traits that allow you to navigate the market's psychological battlefield: the patience to wait for genuine opportunities, the courage to act decisively when they appear, the discipline to sit tight when you're right. These principles have transformed my own trading, and I've watched them change the lives of countless others who embrace them fully. The market rewards those rare individuals who can master themselves first, then master the market. If something in this conversation resonated with you today, if you recognized yourself in these struggles or had a moment of clarity about your own trading journey, I'd love to hear about it. Drop a comment below with Livermore's wisdom and share which principle struck you most powerfully. If you found value in these insights, consider hitting that like button. It helps these ideas reach others on the same path. And if you're committed to developing the patience and courage we've discussed, subscribe to join our community of traders focused on mastering the psychological dimension of markets. There's a video right here that explores how to recognize those subtle signs that precede major market moves, the quiet signals Livermore mentioned that appear before the crowd notices. Click and continue with me over there as we dive deeper into spotting those early patterns that lead to the biggest opportunities in any market.